Good morning, traders. It is Friday, December 8th. We got the jobs report coming out in about 15 minutes or so. So, this is a special edition. We're going to be able to see how that number is received. I believe that we're going to see a bullish reaction, and that's what I'm going to describe in this video. Is the market putting in a double top? There's your high from July, and right now we are on that top. We've got a lot of people wondering. Here's what bears are leaning on. They can see that this rally has taken place very, very quickly, and that during the entire bounce, we've had light volume. For some reason, traders are associating light volume rallies with bearish. That's absolutely not true. Light volume is light volume. It simply means that we still follow the price action. The price action is still bullish, but we trade smaller size. If we saw massive trading volume coming in, then we could get more aggressive. So why do I believe that we don't have a double top coming in? Why do I believe that we're going to break out? Well, here are the clues for me. You can see that from the decline in August through October, the market made a stair-step decline. What does that mean? Well, that means that buyers are still out there. You get a little drop, and then boom, buyers come in. Get a little drop, buyers come in. This tells us that buyers are ever present. If you look at the depth and the duration of that move, it took us 3 months to span this distance. What about the bounce? How long did the bounce take? The bounce only took 1 month to recover all of these losses. So you can see that buyers are super, super aggressive. And it also means the only way that you can make this kind of a bounce in this short amount of time is if sellers are relatively passive. So you need both. Buyers are aggressive and sellers are relatively passive. When you have more balance, then you get this type of herky, jerky, downward price movement. So we also know that there are gaps in here where the market would make a move higher, and there's not a lot of volume on these gaps because we had a gap and go formation. If any of these gaps higher were fake, here's what we would have seen. Gap up, sell, 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 sell. Because sellers would be super aggressive knowing that they have more size to get off and that any bounce is a selling opportunity. Didn't see it there? Now we have the next leg of the rally higher. Didn't see it here. There's no whap, 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 whap. In fact, we get another gap higher. What happens on this gap higher? Asset managers who were waiting for a dip here didn't get one. Asset managers who are waiting for a dip here and some retracement didn't get one. Well, now we've got another gap up and we're close to the high of the year. Now they're starting to get a little nervous because we've already moved this great distance. We're above all the major moving averages, and they still didn't get any size off because they didn't want to chase. So now what happens is they start bidding, bidding, bidding a little bit higher. And that's why each one of these attempts to sell the market off fails. You never even see a drop in the market because buyers are there gobbling up everything that they can on every little dip. And that's why you don't see them. There are some other clues as well. If you take a look at every red candle, so in the last month, we've only had 3 of these. One was this week, had another one last week, and then we had one just before this major gap up right in here. Every time we had a weak market day, and it's kind of classic because they come on gaps higher, and then you get a gap reversal, the gap starts to fill, and buyers simply pull their bids. Programs kick in, you get one of these red candles, you close on the low, you think, oh, well, this is this is the start of the market rolling over, but they happen on light volume. So if we take a look at the volume during these days, it's relatively light. So we're picking up volume here recently, and I feel that's a good sign because we're getting ready to break out. Jobs report's going to be coming out in 9 minutes, so we'll see if I'm right. I also want to talk about how you position yourself. Okay, so first of all, yes, I suspect that the market is going to be moving higher and that it's going to break out to a new high of the year. That's going to get asset managers who are under allocated very, very nervous because we're getting into year end. They care how they're performing relative to the benchmarks, the indices, and how they're performing relative to peers. If the market gets through this high, they are going to know that from previous experience, when the market makes a new high of the year, investors get excited and they start putting more money into the market. They start rotating out of cash and out of bonds and balanced funds and putting more into equities. We also have another clue, and that comes in the form of what's happening in small cap stocks. So recently, IWM, this is the Russell 2000, you can see how it had this really nice breakout in the last week. Small caps doing well, that is risk on. That's another clue that the market could be going higher. So we've got some bullish longer term swing positions that we've been putting on over the course of the last 6 weeks or so. You know that from all of my videos. What are the types of stocks that asset managers are willing to buy? Well, they're not going to be chasing stocks that are blowing through their all-time high because then they're chasing the market higher and higher. Because they've missed the boat, what they will be doing is they'll be rotating into safer stocks. Stodgy old companies who are trading at fairly low PEs that generate really good cash flow. Companies that will look good on their portfolios because they're window dressing for the end of the year, and they're doing that now. Well, what are some of those stocks? I've already highlighted some in the course of the last 6 weeks, but ConAgra was one that I showed you. The last one I showed you during the live event was CVS. So you can see, let's zoom out. Look at ConAgra. Form that base, boom. That's where these latecomers are going into because they can feel that if they're buying a stock that's been badly beaten down like this, ConAgra is a food producer, okay? Not a risky company. Company that's been around for a very long time, people have to eat. So yes, and it tends to go through these sell-offs and rallies and sell-offs and rallies. Well, now we're actually at a point equal to the COVID low. Am I gangbusters, gaga over ConAgra? I think it's going to rally into the middle of this range. When it does so, I'm going to unwind that longer term swing trade. I feel that even if the market rally today does not materialize, then this stock is still going to hold up well because it's been a laggard. And any sell-off is going to give me an opportunity to evaluate the price action. How sustained was that decline after the jobs report? Did we continue to decline after the CPI? Do we continue to decline after the FOMC statement next Wednesday? I don't believe we're going to. I believe because of everything that I've told you right now, asset managers are going to be fairly aggressive buyers. And even though the volume hadn't been great early in the month, you can see how it's starting to stack up here. And you can see how the bid is gradually increasing. So did I load up on bullish positions before this event because I think the market's going to go higher? No. I'm being very prudent. I'm in complete control. I have really nice longer term bullish swing trades on. If I'm flat out wrong and we get a big nasty decline today, then I'm going to be day trading on the short side. I'm going to be offsetting some of those losses on those longer term swing trades. Many of those positions I've gone out 3 or 4 months, so I got plenty of time for the stock to recover. I feel that those stocks are going to be resilient because they have relative strength, another key component to our trading system. And so if we get that decline, then I'm going to be hedging with my bearish day trading positions, very short term positions. I'm respectful of the power of this bounce that we've had. And any little dip in here over the course of the next few days, if it's brief and shallow, choppy, light volume, that's going to tell me that buyers are still out there. And in fact, any little dip is going to be a springboard, and we will whoosh, slingshot through the high of the year. Could be on an FOMC statement that comes out next week. But the Fed is pausing right now. It's what everyone expects. I think the jobs number is going to come in fairly decent because the initial jobless claims for the last 4 weeks have been coming in around 220,000. That's consistent with a 130,000 job growth number for the last month. The wage component is going to be really important. So we're going to also be watching for a wage component that is below 0.3%. At 0.3% would still be okay. Why is that important? Because that's inflationary. That's the largest input cost for companies. So we're going to get ready to watch the reaction here in just a second. The reaction is all that matters. You do not have to dissect the number. Well, the jobs number came in at 50,000 and that's a little lighter than expected. So I think fill in the blank. We're not economists here. We don't have to be economists. All we have to do is watch the price action. And if we do get this breakout today, I believe we're going to have a gap and go breakout. Because once we break out, everybody's going to get even more aggressive. Folks, this is a coiled spring, in my opinion. Let's put up that M5 chart. And this is what the market's doing before the open. Some nervousness, some nervous jitters. So we're about a minute away from this number, and we'll see what that reaction is like. So consistent with what I've just told you about trading on a swing basis, I'm going to put up a very quick little chart here while we're waiting. And you can see in the right corner here what the S&P is doing on a 5-minute basis. This is the SPY. Another reason that I am bullish is because this was a really big rally that we had earlier in the year. We did not have a credit crisis, and that threat loomed early in the year when we had a couple of bank failures. But whoosh, the market rallied up. Now we get into some seasonal weakness up here. This is a time when you take some of your bullish swing trades off. You start taking profits in here because the action's getting a little toppy. It's tired. We got this breakout here, tiny bodied candles near the high. Okay, this is compression. Be careful going into a seasonally weak period. Blam! Then you get your long red bearish engulfing candle. The number's out, initial reactions a little bit negative, that can change. So now we get this market decline. You can day trade from the short side here. You're out of most of your swings. So now you're just kind of evaluating what the strength of this drop is. But you are not getting short on a swing basis yet. Why not? This looks toppy to me. Because you don't have that confirmation. This is a very, very powerful move higher, and it needs to be respected until we see that lower high double top, and now we have an upward sloping trend line that's breached to the downside. We're below the AVWAP-Q. Fine. Now we have the evidence that we need. In fact, this candle couldn't even get back to that candle. So now we've got a nice little downward sloping trend line. We're breaking upward sloping trend lines below that AVWAP-Q. Now you can start taking some swing shorts. Because we had this bounce and because we had this strong move, we know that buyers are still engaged. So we can expect bounces once the market makes a decent move lower. All right, we've had a nice, decent move lower in here. For those of you that follow measured moves, I do use them. Don't want to get into great detail on them, but you can see that if you take this move right here and you double it from that low, you get a move down to about this area. Well, that also happened to be the 200-day moving average. Market's starting to find support here. Take profits on swing shorts. Expect that bounce. Well, we get this little bounce right in here, and then we take out the 200-day moving average with gusto. We start getting into bullish seasonality. So, what does that mean? That means that we start taking profits. And you can see that roughly the height that we had from here to here, start seeing resistance right in there, and we should be able to see a decline that's about equal to that, which, yes, we're pretty close to it. It's getting late for shorts in here. We're getting into a seasonally bullish period, so you tread very cautiously. It's exactly what we were doing if you go back and you watch my videos from mid-October. I am not shorting the market on a swing basis. I am doing exactly the opposite. I'm starting to look for those longer term swings. But I'm not entering them here because Pete thinks the market's going to rally into year end. Market could continue to go lower. We need that confirmation. Once we have a downward sloping trend line that's breached to the upside, we're back above the AVWAP-Q. We're above all the major moving averages, the 100, the 50-day, the 100. This is where you can start swing trading from the long side. Now, I also believe that we are going to be in a longer term market where we can start to swing from the long side and we don't have to worry about the rug getting pulled out from underneath us. Well, Pete, what happens if we go into a recession? What happens if job growth stalls? What happens if unemployment starts to rise? Well, in a higher interest rate environment, that's certainly possible. We haven't seen it during the course of the entire Fed tightening cycle. But now you've got a Fed that actually has a war chest. If the economy starts to slow, they've got lots of room to ease. And so the market is addicted to easy money. The Fed has some firepower to do something about it. When we were at 0% interest rates and we had that policy intact, the Fed was painted into a corner. They had really nothing that they could do. Now they have something that they can do to combat any kind of recession. But the job growth has remained strong. ISM services has remained in expansion territory. ISM services accounts for 80% of our economic activity. The service sector does in particular. So I'm not seeing any dire kind of economic weakness right now. So there's no reason for me to believe that all of a sudden now is the time when the economy is going to fall apart. We'll be watching for it. Even if we get this breakout to a new high, and you can see market actually has been a little bit weak in here. S&Ps are down about 10 points or so. So there's a weak reaction initially to the market. For the market on that jobs report, haven't even looked at what that jobs number is. Let me see if I can bring up a website that will have that information for us, and we'll see what the actual number came in at. I know they were looking for somewhere in the neighborhood of about 150,000 was the initial. 199,000, they were looking for 175,000, so more jobs than expected. And hourly wages up 0.4%. Remember, I said 0.3% was really what we wanted. So good job growth, nice, solid job growth. It's just that that wage component is inflationary. That is why you are seeing this little drop right in here. So the wage component, that's what they're looking at right now. I don't see this as a awful number that's going to rattle the market. It's one monthly number. We've seen it range from 0.3%, 0.2%. Okay, came in a little bit hotter. Is this going to spoil the breakout that I'm looking for? So let's talk a little bit about a market that's rallying and when we want to the types of setups that we're looking for that favor us as day traders on the open. So when you get a breakout to a new relative high or a gap up in a market that's been floating higher, you set yourself up for bull traps, because buyers are wanting to come in and buy the heck out of the market. When they see a gap higher, they expect that it's going to be a gap and go to a new all-time high. Just like in here, high of the year, everybody rushes in, they see this, oh my gosh, there it goes, we got another new high of the year. And those gap ups have a tendency to fail. They're also more difficult for us to trade because we've got a lot of downside, so that when that gap up starts to fail, we've got all this room to fill on the downside. So if you're buying here, where are you going to put your stop? That's a long distance to travel to have a stop. So you've got a lot of risk on these gaps up that the market could reverse. And that's what happened earlier in the week. The dips were pretty deep and the rallies, the bounces were very shallow. Could not get off the deck. Lower highs, sell programs come in late in the day, the bid dries up, you get this little bit of a drop. So a gap up is not our best trading setup. What we would prefer is a gap down. Okay, so let's think about that. On a gap down, we have exactly the opposite. Let's find a gap down. There's a gap down, not a great gap down, but a gap down nonetheless. So a gap down, we have the opposite, because now the market has been trending higher. That's good. We want to join that trend as best as we possibly can. Well, when we have a gap down, we've got all this room that can fill here, and we are entering long positions at a good price. We just have to wait for that support to form. So we make a new low of the day, and then we start rallying off of it. Oftentimes, what you will see off of a gap down in a bullish market is a gap reversal. We could see that today. So we could see an initial decline and then long green candles to fill that gap very, very quickly. And those mean that we've got to take action fairly early in the day, maybe even in the first half hour, the first hour. If you start stacking like this, nice consistent price action. What I prefer to see is not long green candle, long green candle, long green candle. Although that would be very bullish, what I'd prefer to see is lots of little green candles like this, very consistent price action. That tells me that buyers can't get enough. They keep raising their bid, raising their bid, raising their bid, raising their bid, as opposed to a couple of just big long candles that could reverse. So watch for that type of price action this morning. I don't know that I'm going to give you a pick per se today. Conagra, CVS, AAL. I mean, these are all the picks that I've shown you recently. So there's Conagra, CVS, Boring Pharmaceutical store, drugstore, if you will, CVS. Scroll out. You can see how it's had a nice move. Excuse me, AAL. Another nice one that we've been long for quite a while. VZ, we were in a few weeks ago. That's doing fantastic. These are the kind of stocks that we want to be in. These are the swing trades we're currently in. Let's go back into that 5-minute chart and let's see what the market is doing this morning. We'll go into the M5. And look at that. Bounced right back. Folks, I believe we're going to see a decent bid to the market. I don't think that this jobs report is going to sour the mood. The market is coiling to break out. If we break out today, and I didn't even cover the good side of our current positions, all I did was talk about how we're going to hedge risk using short term bearish trades if the market rolls over. Here's how I'm positioned. If this market goes, we have some excellent long term swing positions that we're in. Those positions are going to do great. They're going to kick into high gear on this breakout. And for many of them, I'm going to add to those positions on that breakout. I'm also going to be taking some bullish day trades. You bet your sweet bippy I'm going to be trading the heck out of this if we break out to the upside today, because we have a CPI number coming out next week. We have the FOMC statement coming out next week. I don't know what those statements are going to look like, but the Fed is going to splash cold water on the market because that's what they've done for the last 2 years. So I'm not too worried about it, because right now I sense that asset managers are under allocated. They've missed this move. They need to play catch up. We're going to get that breakout to a new high of the year. It could come today. So what we're going to be watching for is any of that early weakness right in here to be worked off. And we want to see that nice grind higher on the first attempt today. We want to see that breakout to a new high of the year. If it happens early, it will have sustained momentum throughout the course of the day. If that breakout attempt fails, and then we keep bumping up against it, then it may not happen today. So it has to happen early, because if it happens early today, then you have a chance for the momentum to continue to build all day long. So okay, how can I do a video and not highlight a stock, right? All right, we've gone this far. Let's find a stock we can highlight. Let's find something we like. Now I'm going to shy away a little bit from tech, because tech has been a little soft, although I really did like AMD. AMD, I think that's going to be your pick. Even though it's a tech stock, I loved what it did yesterday. They had some news on, I didn't have to go any further than my Green Royal Flush and the second stock on it. Yes, I was watching it yesterday. I loved the price action in AMD yesterday. It is a choppy stock. You can see that from the price action here. On 10TL, these are our automated trend lines. We have 3 trend lines, all 3 of them broken to the upside yesterday. Stock closed on its high. Look what it's doing already this morning. It's starting to inch higher. Put that M5 chart up. You can see after the jobs report, it's starting to inch higher. We've got volume coming in. And let's take a look at what the market did. Well, the market's starting to recover, but these are only 2 bars after the jobs report. These are about 6 bars. So even with that weak reaction to the jobs report, look what AMD was doing. Tick, 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 higher. I love this breakout right in here. So I think AMD is going to continue to push higher, and I believe it's going to take out that high of the year, which comes in at about 132.80. So how do you play it? Well, on a longer term basis, you can buy in the money calls that have a couple of months worth of life left. Look for options that are trading with a 0.7 delta or higher. That's how I would play AMD. I like this breakout. I think it's going to have at least another week to 2 weeks worth of positive price action on this breakout if the market continues to break out and move higher. Yeah, I like AMD. That's your pick of the day. I'm going to do a video on Sunday. We'll recap how AMD performed today. I'm expecting it to continue to go higher. Let's see how that jobs report pans out. Let's see if I'm right. I think I'm right. I think we're going to get that breakout, but I'm going to wait for that confirmation. And then when I see that volume coming in on that breakout, then I can get more aggressive with my longer term bullish swings. And absolutely, I'm going to be trading short term on a day trading basis, get long there as well. Thanks so much for watching, everybody. Please leave your comments. I am going to be looking to do more live events in the future also. The response to those was fantastic, so we're going to be looking to do one of those every Wednesday, hopefully during market hours. And I might even add a live event where I do it solo without Harry during the week also, because it gives me the ability to answer some of your questions live. Thanks so much for watching. Good luck with the market today. We should see some pretty decent price action.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.